that I can share that can help with the change in the market from being a very competitive seller market with many deals obviously being in bidding wars and going over ask, some quite substantially, to now being more balanced, maybe even a buyer's market for the first time in several years. Number one would obviously be, you don't want to go into any deals firm without condition. You'd want to make sure you've got conditions for property inspections, financial approval, mortgage approval, potentially even like a home insurance approval. Inserting these conditions back into the offer to purchase and accepting them on the sales side too. Like if you're a real estate investor and you're selling, we're going to all have to accept that the market has shifted. You're not going to see bidding wars and stuff like that anymore, and even maybe firm offers, right? Better to make sure your buyer's done all their due diligence and got everything properly approved at the outset, as opposed to finding it out the week of closing or day of. Because what we're seeing as lawyers on these changing times is essentially we get to the week of closing or even potentially the day of closing, and people's financing is not coming in as high as it needs to, or there's significant delays in the mortgage being processed and approved. So extensions need to be requested, or people are not able to potentially sell their house, which was a significant part of their plan of financing, the acquisition of the property. So I think, some practical tips would be include the conditions, allow for a potentially longer closing period. Don't do 30 or fewer days. Do, maybe 45, 60 plus days, maybe even longer. Build in like a conditional period of like 15 to 30 days. And then specifically with the financing, if it's possible, work with a mortgage broker or a bank representative who's handling your financing of the deal, and make certain that it's not just a pre-approval letter. See if they can actually actively order the appraisal, pay the money, pay the $500 or whatever it is to get that appraisal done ahead of time, because the banks are not going to finance your acquisitions based off of purchase price in an agreement. They're doing it based off appraised value. Always have, always will. We just never had to worry about it because everybody knew these appraisals in the hot market were always going to be the purchase price or better. Well, I mean, I think it's always beneficial, and especially with kind of the shift in the market now that it's a bit more of a buyer's market or a bit more of a balanced market. Having conditions that allow you the due diligence to, check into things like your finance, your mortgage approval, insurance approval, due diligence of like property search and inspection. If you are, talking about an investor specifically, they might have other partners involved, so they want to have it be conditional upon review and due diligence of their investors as well. Depending on the scope and size of a project or the type of property, if it was commercial or potentially was commercial before, there might need to be environmental searches done. Another thing that commonly is overlooked, but having the deal conditional and or terms related to permits, work orders, zoning, those are really important. Easy example, let's say a client's buying a property, but there's no conditions, or at least there's no condition about permits, use, and zoning. If it turns out, in fact, the property is being bought to be used as a duplex because that's how the seller uses it, but then it turns out that there's a notice from the city when the buyer closes on the deal that it's actually not legally zoned to be used as the duplex. Now they've got a problem in fees and costs converting it to a duplex, which they didn't anticipate, which could considerably impact whether or not they would have done the deal in the first place. So that's an easy example of how adding that type of clause can be very important to somebody buying.